back. This is Boomer Life on CL 650.
If I had $1 million, well, I'd buy you a house. I would buy you.
And we're back. This is Boomer Life on CL 650. I'm Joanne Sutton, and today we're talking about your financial future with Jim Doyle, Senior Financial Consultant with Investors Group Financial Services, Inc. Also, we'd like to invite you to attend an opportunity to meet Jim at the Tapestry Foundation's Seniors Lifestyle event. It's at Van Dusen Botanical Gardens, Wednesday, October 7th. So you can mark that on your calendar. So Jim, with 25 years of experience under your belt, you've probably had a few clients over the years express some regrets when it came to market downturns. Things maybe they wish that they hadn't done, and maybe a few they wish they had. Would you mind sharing a few of these experiences with us?
I think the biggest one, time and time again, is the regret of having jumped out of the markets when the volatility got to be too much. Another one is selling low and buying high. It can be a heady ride. Keeping calm, cool and collected when your impulse is to cut your losses and run. And this is where the value advice comes to bear. Having a ballast to hang on to until the markets settle back down.
I really like that, Jim. The sense of offering a safe harbor really is what the proper advice is all about.
We often have new clients referred to us for a second opinion on their situation. If they feel they've reached the end of their rope and are determined to sell their positions, it makes me wonder, though, how did they reach this stage? What type of advice has this client been receiving? And how should I interpret their reaction at this point? If they're determined to sell, have they been considering this for a period of time, or is it an impulsive reaction? Creating a sense of security during periods of turmoil doesn't have to be an all-or-nothing proposition, i.e., sell one position and switch into another. It could just mean a further conversation and education is necessary to offer some sense of reassurance that they and their portfolio will be okay.
Well, this is a great explanation as to how advisors, quote, unquote, earn their keep regarding things people may have wished they'd done differently. You're suggesting that they might have wanted to take advantage of some of the prudent buying opportunities available. Is that right?
Yes, John, let me tell you, market downturns, especially substantial ones, can represent good buying opportunities. Yet, very few people end up buying anything due to emotions running high, fearing further losses. If we look back at downturn periods like 2000 and 2008, imagine the outcome if you'd bought some quality assets at deeply discounted prices. What would your portfolio look like today?
You can chalk one up to hindsight being 2020. That's some great advice. And how about on the wish they hadn't done that side? What are some of the usual regrets that people have?
On the wish they hadn't done side, one that comes up fairly often is over-concentration in a particular industry or position, such as a stock or bond, or even being overweight, holding too much of one country, like Canada as an example. Think about it. If you're holding one of those high-rate oil company bonds today, you're probably feeling a little bit differently about them than you were earlier. Another area of over-concentration could be in RRSPs. As you may know, RSPs no longer have a foreign content limit. In the past, we used to have a 30% foreign content limit, but then the government got rid of it altogether before 2008. Yet, many Canadians might be still significantly overweight in Canadian holdings.
Well, I think you've really struck a nerve here for a lot of us. Basically, what are we missing out on if we are overweight in Canadian holdings?
We're missing out on growth opportunities in other areas. What's been interesting so far this year is that many people perceive Canada as a resource or commodity and energy market. With the demise of the Canadian dollar against the U.S. currency, there's been an opportunity to make a little money by having assets invested outside of Canada.
So you might suggest revisiting your current investment selection just to make sure that you're not over-concentrated or over-focused. You focus too much on one particular area and missing out on other opportunities. Is that what you're telling us?
It might make sense. Yes, Joanne. I'm not sure if I've mentioned this strategy before, so my apologies for repeating myself. But there's a concept known as portfolio rebalancing. And this is one strategy that just makes sense to me. Imagine you held a portfolio with a typical 40-60 split. And that what I mean is percentage holdings. Okay, 40% in fixed income investments. These are your interest-bearing investments, and 60% in equities. Now we also call that stocks. Okay, so as an example, if the equity market declined so that you ended up with a portfolio that had 50% in equities and 50% in bonds, a shift from your usual mix of 40% fixed income and 60% equities, you might want to rebalance to get back to your original mix to make sure that you're still comfortably within your risk profile in an effort to protect your portfolio.
Rebalancing, it's just a little bit of an adjustment. It does sound like there's a lot of revalue to be had in having a rebalancing strategy.
If your overall risk profile has changed as a result of a market downturn, rebalancing back to your original asset mix may make sense as a form of portfolio protection. Remember the premise? Buy low, sell high. Market declines can see one asset category dropping while another might be holding steady. It's not uncommon that, when markets start to fall, there can be a desire to remove elements of risk, selling some of the riskier investments and adding to the more secure investments in the portfolio. Instead of being a victim of a down market, do you want a chance to make some money in a market decline? This strategy might help.
Sounds pretty good to me. We all feel terrible when our portfolios are going down, and then there's nothing we can do about it at that time, but proactive solutions seem to be a great idea.
I know this sounds a bit contrarian, but yes, I could be encouraging people to increase risk at a time when their heart and soul could be telling them to reduce risk further. This strategy doesn't apply to everybody, but you may want to explore whether taking some of your assets from your fixed income or interest-bearing investments and moving them into another type of assets that just dropped is the right strategy for you. When the markets recover, you have an opportunity to make some money from the downturn instead of just recouping your losses.
So it sounds like adding risk is appropriate at a time when investor psychology, otherwise known as our emotions, might be pressuring us to lose some of the risk. It might be worth considering. Does that sound right?
You sure do. Again, if you don't work with an advisor, it can be more difficult to follow your financial plan when market volatility arises, casting doubt on your financial picture and ultimately the investment choices that you're taking to take you there. It's imperative to work within your comfort zone. If you're not certain why you're in certain holdings, now could be a good time to consider your options and maybe make some changes. And if you're currently working with an advisor, a conversation about the gray areas in your portfolio could be a great place to start.
Well, it definitely sounds like it's valuable to have a supportive advisor to help guide the tough conversations, implement your plan, and ensure you're on track to reach your goals. Thanks, Jim. You're listening to Boomer Life on CL 650. I'm Joanne Sutton. Today we are speaking with Jim Doyle, Senior Financial Consultant with Investors Group. And Jim, I know you've mentioned before that if our listeners have a bit of doubt about their situation or where they're going, which direction they're heading financially, that it can be as simple as giving you a call to gain some clarity. If you're not able to make it out to Tapestry Foundation's Senior Lifestyle Tapestry Talks at Van Dusen Gardens on October 7th, you can actually learn more about how Jim can help with your financial situation by simply giving him a call. Here's the phone numbers, 1-800-665-7178 or direct at 604-682-5431. Of course, there's still more to come after the break. Jim is going to share some advice on back-to-school planning for kids and grandkids. And have you contributed to your RESP lately? That's all next on Boomer Life on CL 650.
Canada's only weekly radio show dedicated to the baby boomer lifestyle. This is Boomer Life on CL 650.